Hello and welcome to the day ahead. It is Monday, March 7th. I'm Andrew Gagan. Well, the bloodbath on global markets has continued as the escalating crisis in Ukraine overshadowed a stellar US non-farm payrolls report. European equities took a nosedive, with the FTSE 100 suffering its worst week since the beginning of the pandemic, down nearly 7%, with more than £130 billion wiped off the value of the top 100 on the bourse. A bit of a whipsaw session on Wall Street, with all three of the majors opening sharply lower before recovering some ground after a stronger than expected jobs report saw some bargain hunters swoop in. Treasury yields again lower as the flight to safety continued amid rising uncertainty over the war in Ukraine. 1.5 million refugees have fled the war-torn country, with persistent fighting blocking the efforts to evacuate thousands from the besieged city of Mariupol for a second day in a row. This as tensions rise after Russia took control of one of Europe's largest nuclear plants, with the US calling the attack a dangerous escalation and the G7 agreeing to further sanctions if the attacks don't stop. On the sanctions front, Visa and MasterCard both severing operations in Russia, with the central bank saying credit cards issued by banks using those systems will stop functioning overseas after March 9th. Adding some local lenders could look to use China's UnionPay system instead. Well, turning to the bigger picture, and it is a perfect storm for global markets. Ukraine, the European Central Bank, US inflation data and the Fed all on the watch list this week. Let's though first take a step back to Friday's US non-farm payrolls jobs rising by 678,000 in February, significantly above forecasts of 400,000. The unemployment rate falling from 4% to 3.8%, which is the lowest since the pandemic began 2 years ago. Average hourly earnings were flat. In response, Fed member Charles Evans saying the jobs report doesn't alter the Fed's plan, and carrying out 25 basis point rate hikes at each meeting may be more than essential. Elsewhere, focus for the market this week will be on the European Central Bank, holding its policy meeting on Thursday. The broader economy is being threatened by stagflation as energy prices spike, with the continued conflict in Ukraine expected to weigh on growth. The central bank is widely expected to keep rates on hold, with little signal of a rate hike expected in the coming months, with expectations of a more dovish ECB. Eurozone money markets are pricing in around a 25 basis point worth of hikes by the end of the year. Major currencies were mixed against the US dollar. The Aussie dollar rising to 73.81, which was a 4-month high. It has come back a little. Looking deeper at the week ahead, inflation in the US again high on the watch list, with CPI data released on Thursday. The market is looking for yet another scorching print of 6.4% year on year, which will likely be the final signal for the Fed to hike rates at its meeting next week. The central bank is now in blackout, with no more guidance from any Fed officials before that meeting. And in China, a raft of top shelf indicators hit the wires, with trade data, CPI and PPI all released. So let's take a look at what's going on at home, and we're looking for a positive start to the trading week. SPI futures signalling a 28 point rise, 0.4% rise at the open, though that should be taken with a grain of salt as futures markets haven't reacted to that news over the weekend. The commodity complex continues front and center, with oil hot, breaking above the $115 a barrel level. That's its highest price since October 2008. Dr. Copper touching an all-time high to end the week, with gold soaring, posting a weekly gain of 4.3% and closing in on the $2,000 an ounce level. And in the soft space, palladium topping $3,000 an ounce as supply fears grow. And sticking in the oil space, Tesla chief executive Elon Musk has taken a Twitter saying, "I hate to say it, but we need to increase oil and gas output immediately as Russia's Ukraine invasion chokes off supplies and sends gas prices soaring." He went on to say, obviously this would negatively affect Tesla, but sustainable energy solutions simply cannot react instantaneously to make up for Russian oil and gas exports. It comes as the Biden administration weighs up a ban on US imports of Russian crude oil. Last week, oil capped its biggest weekly gain on record. And on the data docket, a quieter week here at home. Tomorrow, it's all about sentiment. ANZ Roy Morgan's weekly read on consumer sentiment, confidence, and NAB's closely watched business survey. Wednesday, Westpac and the Melbourne Institute's monthly sentiment print. And RBA Governor Philip Lowe also in focus, taking to the podium at the AFR's Business Summit. Thursday, weekly payroll jobs and wages figures, and rounding it out on Friday, back to the RBA with Governor Lowe participating in a panel discussion at the Banking 2022 conference in Sydney. Again, all eyes will be on any comments around the path of policy, the latest wage data and the war in Ukraine. That is your day ahead. See you tomorrow.